Hi guys, welcome back to the Bitcoin Briefing, the channel that breaks down Bitcoin in plain English. And today we're going to be diving into one of the most debated topics in the space, dollar cost averaging versus lump sum. We're going to be investigating which strategy actually works better, which one gets you a better return on investment and makes you more money, and what would happen if you'd used either of the two strategies over the past couple of years and what returns you would have got given Bitcoin's price appreciation. So with that said and done, let's jump into it. To start with, I'm using this free Bitcoin DCA calculator at satoshi.co.il, and it allows you to implement your DCA amount and compare it directly with a lump sum investment. So let's start with an investment amount of $500, and we'll go for a DCA of a monthly basis. So you're investing $500 every month, and you're going to start in 2024. So this assumes that you start in January 2024, so you have 20 purchase months effectively, yielding $10,000 invested, 20 times 500. So at the current value, you'd have $15,351.65 at Bitcoin's current price, so therefore $5,351.65 in profit. That would have yielded a 53.52% return on investment, 30.93% annualized growth rate, and the amount of Bitcoin you'd have gained or accumulated is 0.16. So this chart allows you to directly see the comparison to a lump sum investment, and you can immediately see that the lump sum investment is significantly higher than if you were DCAing over that same period of time. The great thing about this calculator is it gives you a performance summary. So it shows that your total return was 53.52%, your CAGR was 30.93%, your profit was 5,351, and your average cost basis. So remember, over time, using a DCA strategy, you're going to average out a price as you're buying Bitcoin at different prices along the timeline. The comparison to a lump sum. So lump sum, you can see you would have got 134.39% increase, which would have got you about a $23,000 portfolio. So you can see compared to the 15,000, you would have got significantly more. However, you've got to remember that with lump sum comes extreme volatility. You've got to be able to hold through that volatility, stomach that volatility, potentially lose sleep at night if that $10,000 you've invested right at the start as a lump sum is particularly life-changing. If you've taken leverage out, for example, to do that, which I don't believe a lot of people should do that. And also you've got to make sure that you're comfortable in that investment. So it's all well and good saying that it would have been fantastic to invest $10,000 in Apple when it was a fledgling asset in the 1980s. However, you cannot see the future. You do not have a crystal ball. You do not know if Apple's going to be the might of which it is today, or it's going to go the way of a smaller tech firm that goes bust. So it takes a lot of conviction for you to do that, and I applaud anyone who has done that in the past. So let's take another approach and be a bit more pessimistic. What if you were to start your Bitcoin journey in 2021 at a Bitcoin cycle peak? So say if you find your conviction and you realize that Bitcoin is the best performing asset in history and you wanted to invest and capitalize on that gain, so therefore you would start DCAing or lump summing an X amount portion of fiat into the market at, for example, this peak here, which is at $65,000 in around April 2021. And it was quite an interesting year that year because there was a double peak. So let's say you started your journey at $65,134 as a Bitcoin price. What effect would that have on your portfolio's performance over time till the present day? And which strategy, via lump sum or DCA, would get you the best result and best return on your investment? So let's do that now and jump back to the calculator. Okay, so let's input a weekly DCA of $100. Let's start in 2021. Remember, this calculator starts from January 1st, 2021. So that would correspond to a Bitcoin price of around, let's take it there, of around $25,000. And what effect did that give you using that approach? So you would have invested a total amount of $24,100. You would have had 133.94% return on your investment, and you would have accumulated 0.597 Bitcoin, so a very nice amount of Bitcoin. And you can see by our output chart that the lump sum strategy gives you the best return on your investment. But what's even more interesting is the volatility and the shape of the curves. So you can see that if you lump summed your initial $24,000 into the market in 2021, you'd obviously had that increase in Bitcoin price as we went up to those all-time highs. But then when we crashed post the FTX collapse, and I implore everyone to go and read about that if you haven't heard what's happened, but it was another one of those things that allowed Bitcoin to mature in a healthy way. It was very difficult for the people who were involved in FTX, but those sort of crashes are all part of the journey into healthy adoption, I feel. So going back to our original curve, is that you would have seen your investment grow to $56,000, so pretty much over double in price, or nearly double in price, and then it would have crashed all the way down to 14,000. So you would have been $10,000 down from what your initial investment would be. And if you're an inexperienced investor, you would not have a great time at that point if that $24,000 that you initially invested was a significant life-changing amount of money, or you borrowed that on leverage. You would be having the bailiffs knocking down your doors, and you'd have to pay those loans back. But then if you held through the crypto bull markets and where the market started to pick up, you would therefore increase your portfolio performance, and you would end up with $77,000. And we could do a comparison. This tool gives you the great comparison, so it shows that the performance on DCA was 133.94%, and you can see that the lump sum return was 224.04%. So a difference of 90% between the two strategies. But DCA reduced your volatility purchase price by approximately 17%. Now that doesn't seem like much on paper, but when you look at this chart, if you started with 24, you rode it up to 56, fantastic. Then you see it crash to $14,000, and then you ride it up for the next, 2.5, 3 years to get where it is today at 77,000. You'd had to have a lot of strong conviction at that point to see your portfolio do that and know that you're right in the end and you've got the end game worked out with Bitcoin. Whereas if you see DCA, you can see a gradual increase in your portfolio performance over time. And that's why DCA is a very powerful strategy. Lump sum may work significantly more in terms of overall performance, but dollar cost averaging removes that volatility and allows you to sleep at night, giving sort of positive psychological effects. You're not having to worry about your performance investments. You're not having to check the Bitcoin prices every day. It's just an easy, hassle-free option. And the guys over at Bull Bitcoin did a great article about DCA versus smash buy, so lump sum, and analysed various performance across time, various different aspects of DCA versus smash buying, given different parameters. But there's a really great table which essentially summarises everything. So you can see that using a monthly DCA, your average returns 333.41%, with a standard deviation of 437.75%. So standard deviation is a measure of the volatility of the asset, of the performance. And then we've explained what the CAGR rate is. There's a whole video about that on my channel, so please go check that out. And again, the volatility of that CAGR rate, 50% on 41% CAGR rate. So your win rate is key, 17.53%. Similarly to weekly, you can see that the average returns go down, the standard deviation goes down, the CAGR goes down accordingly, but the standard deviation, the volatility of that CAGR follows suit. Now here's the interesting one, lump sum, 1,738% performance, so 4 times as much as a DCA strategy, but your standard deviation, 3,300%, so nearly a sort of 9-10x of volatility on monthly and weekly DCAs. So it again plays into that field where you need to be convicted, you need to know what you hold if you're going to lump sum that asset, and you need to be able to prepare to hold for the long term. Hodl is always the key. You cannot look at the peak and think, great, I'm going to keep going for that, and therefore when it crashes, sell when the low price. You need to just hold over the long term, and Bitcoin will do what it's always done, appreciate in price and create generational wealth for you and your family hopefully alleviating the cost of living crisis that's affecting the entire world at the moment. I'm currently based in the UK, and right now everything is ridiculously expensive. Things that you could have done before COVID, essentially go out for a meal and have a few drinks, now cost 3-4 times as much. Your weekly shopping, 3-4 times as much. And I think there's a great meme that's going around, or at least a picture showing that someone's shopping in 2020 when they went to the supermarket. They literally bought the same amount of items, and I think it was sort of 40 quid back in 2020, where it's 160 something now, so getting on a 4 times increase. I'll link this article in the description, but please go check it out. It's a really good performance analysis. And so to round off the video, guys, lump sum gives you a better performance over time, however comes with massive volatility. You need to be able to hold and have your conviction for the long periods of time, whereas DCA, while returning less, is a relatively stress-free option. There are sites and wallets and Bitcoin exchanges that allow you to automate Bitcoin buys. Strike by Jack Mallers allows you to have fee-free DCA options, which is what I personally use, and it's absolutely fantastic. I recommend that. Again, I'm not affiliated with Stripe, but I think it's very intuitive and easy to use, which is also key. So if anyone would like a tutorial on that, obviously let me know in the comments and I can absolutely make a video. Thanks for watching. Please like and subscribe to the video. It really helps me grow the channel. I really want to spread the message about Bitcoin as much as possible. I am very passionate about the subject. I really want people to understand that their hard work, their time, their energy is going into making money that is depreciating, that people can print whenever they want to, and therefore they need to start thinking about how to utilize that wealth that they've generated in a better manner to make sure that they get their time back.